What is going on, everybody? Q here from Hyperstocks. Today we're going to talk about the S&P 500 and the stock market projections for the week, and we're also going to talk about some opportunities that we're finding through the volatility and opportunities in different sectors that we usually don't trade, but these are sectors that we've been talking about for the last few weeks if you were to watch some of our videos. If you would like to subscribe to the channel, please do that now. Give us a thumbs up as well. That would be really appreciated. Without further ado, let's go ahead and get started. So first of all, let's talk about the S&P 500. Last week, we came down to a low of 432. This was Friday's daily candle. You can see that throughout the last few months, the stock market has been experiencing a lot of selling, indicated by this volume at the bottom. And you can see that when we came down to that 420 mark and bounced back on January 24th, the relative strength was extremely strong to the downside, which means that this relative strength of selling was much stronger than this previous low, meaning that more sellers were involved and there was more pressure to the downside. So this relative strength is already a key sign that we use as an indicator of a potential further downside, considering we're starting to head back down now. So the most important headline that came out over the weekend is going to be Putin's threats to invade Ukraine, which we've all been hearing about. This was the cause of the initial drop, combined with high inflation rates in the United States. So the cause of the initial drop that brought us down here was the first signs of threat of Russia invading Ukraine, but it looks like things are starting to get worse and we are looking to head lower. So market futures project that we will be opening around the 427 mark. It's still early in the futures trading, so we are likely to gap down tomorrow. A lot of people are expecting us to landslide down to retest 420, but making projections like that during this time is going to be a little bit premature. The idea of us as day traders and swing traders is to allow the full day to develop. So rather than going based off of what you hear, allow yourself to react to what happens on your actual screen when it happens. So of course you want to have your watch list in place. You want to know what you want to trade when things happen a specific way, but try not to make too many projections into the future, and also try not to rush your trades. Just because we're going down tomorrow, it doesn't mean you need to buy puts at open. Allow the market to give you a setup. If there's no setup, of course, don't force it or trade it. A lot of times you'll also see traders not be very familiar during these times of what to do. If you're one of those traders, then it's completely fine. Just go ahead and sit on the sidelines and wait for your opportunity to come around and make some notes. You know, these things are going to happen over and over again in our world. Maybe they're not the same exact scenario, but you know, in the history of the stock market, through every downturn, there has been a leading story of why the downturn happens, especially sharp ones like the COVID-19 crisis. So, you know, throughout our history, these downturns happen all the time. Make some notes, see what the movement looks like, and maybe make some trades off of it. So in terms of the S&P 500 in specific, our critical support going into this week is going to be 420. Before that, we have a support of 432, which we're projected to open below at open tomorrow. So the next support here would be 420. If we were to break 420, we fall into the next trading range. So trading ranges, they're derived from previous points of consolidation. We can see that back in June or July of last year, there was a period of consolidation that consisted of about 3 months between June and July, and this box right here was between 400 and 420. So if we were to break below 420, we will likely have a few bounces and then eventually make our way down to 400 in the next few weeks. So this is assuming that no positive catalyst carries the market back up. Of course, with the news developing every day, we may see Russia back off a little bit. We may see some agreements come to suffice, and then we may see a reversal in the market. But so far, based off the charts, we're looking to head down to that 400 mark if we were to break below that 420. Now, some of the stocks that are going to be sold off the highest are going to be companies in which are overvalued. Companies like Tesla, for example, you can see came down from highs of $1,200 and now is headed lower and lower. And that's because the company was simply too overvalued for its time. You also, not to place Tesla in the same, field as Roku, but Roku is another company in which was way overvalued for for how valuable it is and for their numbers. So you see this massive correction taking place on the company like this. So we're seeing a bunch of these companies. Our plan into going into this week is also going to be capitalizing on puts and short plays into these companies. We've seen plenty of opportunities, and put plays pay a lot of money if you catch them just right, and that's usually a sweet spot for us. Our strategy is catching them off of the upside reversals. So we've been seeing a lot of good luck. We're going into this week with our Lululemon put, which is going to be pretty nice payday tomorrow. Now, in terms of some other sectors that you could be playing during these times, you're going to notice that safe haven investments are going to start going up. So a few weeks ago, we put out a video talking about gold in specific and how it's probably going to be the safest investment over the next 2 years. And the reason why is because when the markets recovered from the crash of 2008, and as the Fed began taking back their raising their interest rates, which is exactly what's happening now, gold was the only investment in which had the biggest return over the next few years. So like history repeating itself here, we have 10 to 12 years later, we also have gold beginning to spike, and the markets are going down and experiencing a lot of volatility. That volatility is bringing a lot of opportunity in other sectors, gold being one, and then obviously, if you don't know this, but Russia being a large export of oil and wartime in general is going to be good for energy stocks. So oil companies and natural gas companies are going to experience upside moves during these times. So of course, trade what you see, not what you think. So going into tomorrow, make sure we're keeping all these ideas in mind, and let's make sure that we are strategizing and planning trades around them. Now, of course, these are just general sectors we're watching between energy, gold, and the market in general. The market in general, we're watching for put or short opportunities, commodities like oil, and then precious metals like gold. We're watching for long opportunities, and there's going to be specific stocks in these sectors that we're watching for these opportunities. There's going to be plenty of it because volatility brings that opportunity, and that's exactly what we need as day traders. You may not be holding trades for 3-4 days anymore, but we are seeing overnight trades that have been just perfect for the patient trader, and that patient trader allows the market to develop and then makes his judgment based on the last final hours of trading to take on swings into the very next day. And then also intraday opportunity happens all the time. We're seeing markets have massive trading days. So we're seeing days like this where markets move from 438 to 431, or they move from 445 down to 437. I mean, these are all massive opportunities that we could be taking advantage of. So either way, guys, I think nobody wants the war to happen. Of course, you don't want innocent lives being thrown around as they are, and it's a very sad update from Russia. We were hoping that this would somehow start to be reconciled by now, but the fact that it's not, us as day traders and as people who manage the markets, we have to approach these times with a lot of selectiveness. We have to be selective in our trades, and we have to be very methodical in our approach. And we also have to look at history and see during war times what are the things that begin to go up and where are the opportunities taking place. Let's hope this war starts to come to an end. Let's hope it doesn't get any worse. But until then, we will be trading based on the updates. Once again, guys, thank you so much for checking in. If you haven't yet, please subscribe to the channel and like this video. Thank you.